Welcome everybody to one of the first CV Labs events that we're now using a new streaming software, so you no longer have to view all the interesting webinars and online shows that we do on Zoom. You can now view it on LinkedIn or Facebook or Twitter or whichever social media platform catches your boat. So for those of you that don't know, my name is Gideon Greaves and I'm the Managing Director of CVVC Africa. A quick introduction on the business. We're a venture capital firm focused on investing in startups that utilize blockchain. We have a global presence at a couple countries in Europe and, of course, here in South Africa with a pan-African focus. We have another a business within the fold called CV Labs. We focus on trying to increase the visibility in the Web3 world and try and bridge the gap between Web2 and Web3. And to really bring the ecosystem together and accelerate adoption. We have co-working spaces, we do some consulting work, we do events, pitching competitions, which is what this is about today. We do research and reports. We work with fantastic companies like CertiK, and we'll hear more about them in a minute. In fact, if you want to learn more about the African crypto, blockchain, and Web3 ecosystem, we wrote a fantastic report. It was the second one that we've done on Africa, our African blockchain report, which came out earlier this year, which focuses on all the interesting data about Africa and its stance on Web3 from a regulatory perspective, but also a lot of funding data, which is really quite fascinating and interesting, where you can see that Africa really is exploding, not just from a blockchain perspective, but from a venture funding perspective as well. Some really interesting statistics from the report, which you can, by the way, you can download that report by scanning the QR code on your screen now. If you look at venture funding globally from the year 2021 to 2022 decreased by 30%, of course, because of the macroeconomic downturn. And if you look at Africa, there was an uptick of 34% in startup funding, which is really exciting for all the activity that's happening on the continent. And if you look into blockchain, globally, there was an increase of 4% into startups that were utilizing blockchain from 2021 to 22. And in Africa, there was an increase of 429%. So, of course, this is our niche. This is where we're playing. And we're really excited to watch this ecosystem grow, to be part of it, and to also invest into these startups and to work with amazing organizations like CertiK. And on that note, of course, the whole premise of this webinar is a precursor to a physical event that we'll be hosting in Cape Town soon, a pizza pitching competition where you can come have some drinks with us, some pizza, and watch some African startups pitch. And the sponsor of this and one of our ecosystem partners is CertiK. And if you have not heard of them, I'll let Chris tell you, but they are the largest smart contract auditor in the world, which is really important for startups to have that sort of stamp of approval from CertiK. So even for us as VCs, when we're engaging with startups, we're always looking for those stamps of approval and credibility before institutional money flows. And when a startup has received an audit by CertiK, it always gives us that comfort that we're investing in a solid business and a solid startup. So Chris, the head of CertiK Africa and the key representative on the ground, I'm going to introduce you. Over to you.
Thank you, Gideon. Welcome to this event. My name is Christopher Kanabi Mulinde. I'm a business rep for CertiK on the African continent, and a little bit of background to who we are. CertiK are a security company. We secure and monitor blockchains, smart contracts, and Web3 applications. That's really who we are. That's where we come from. The company itself was started up by two professors, Professor Zhong Shao, in the Department of Computer Science at Yale University, and Professor Rong Hui, also from the Department of Computer Science at Columbia University. Both professors obviously set up this company with a view of making sure that we can serve to secure the blockchain. So that's why our main bread and butter is about securing and monitoring blockchain, smart contracts, and Web3 applications. So we have a team of security experts whose main job is to ensure that they undertake the audits that are required. We've secured, to date, we've secured $360 billion worth of assets. We've conducted over 3,700 audits or projects, and we've detected over 60,000 vulnerabilities. So that's quite a substantial amount. And we believe we've done probably about 60% of all audits in the Web3 space. So this experience gives us an understanding of how we can help and assist many of the startups that we have on, on the continent. Now, one of the things that's really key for startups is understanding the importance of security. I know that many startups, security is something that is thought about rather at the end, or indeed after the project has been launched. But we believe that security is really key and very important. Here are some stats for 2022, just for you to understand the importance of security. $3.8 billion was lost in 2022, either from flash loan attacks, rug pulls, phishing attacks, and exit scams. So it's important for startup projects that when they're getting into to launch their projects, that security becomes a very important aspect that they think about. Hacks, exploits, and breaches are very quite common in our industry, and indeed, if they lead to personal data loss, then it becomes a problem for the project, for the startup, for the organization. Another very important aspect is many of these Web3 applications and DeFi projects, they secure billions of dollars of assets. And so security and securing those projects becomes a very critical part of what they need to do. So why do you think you need security, and why is it that it should be CertiK that should be helping and supporting you in this space? CertiK has the most powerful cyber defense mechanisms for the blockchain. What do I mean? That there are a number of offerings that we do have that will support you along the way. From undertaking KYC, which is knowing the project team and doing that due diligence that you need to do to ensure that you build trust in the user community, and indeed in many of these could be investors perhaps, that you also need to ensure that you get their own, they understand who you are. A second is around the audit, which I talked about. Now, the audit is our bread and butter, obviously, and that's what we're known for. And there are a number of ways in which we undertake that, from having a manual exercise being undertaken for your smart contracts or your blockchain protocols. But also because of the size and the breadth of what we've done over the last 4 or 5 years that we've been in existence, we've also built AI tools that support that audit process. So there are those tools for supporting the audit. There's the manual exercise that we undertake. We've built tools like Skynet, which constantly monitor mainnet and contracts that you've deployed on mainnet to be able to give you alerts and tell you when things are going in a different direction. We've got other tools like Sky Insights and Incident Alerts, again, to try and support the whole idea of making sure that you have this very powerful defense mechanism for the cybersecurity. So the full stack approach, which I'm providing, if you can see on the screen, the audit, Skynet, KYC, incident alerts, and bug bounty, those are all very useful tools Many of them will work in particular instances for you as project teams. Many of them will also be useful for different types of projects that you're having. So for example, a project may require an audit and a KYC. Other projects may require perhaps a pen test. So the different mechanisms that we do have for supporting your cybersecurity, you would need to perhaps talk to some of our security experts, and then we'll be able to support you going forward. In terms of statistics and what we do, we've audit over 300 contracts every month, and that number continues to grow, obviously. We audit over 5 million lines of code monthly, and obviously we're detecting quite a number of security vulnerabilities, which we build into our database. And of course, in terms of the breadth of what we've done so far, a number of ecosystems are captured here that we've looked at, from the Binance, from the Avalanches, a number of ecosystems that we do support when it comes to blockchain security. I think I would want to stop here for now. I'm sure there will be more questions further on later on into our discussions, and I'll be able to provide more detail on what we do and how we conduct this. I'm going to hand over to my colleague, who will then take it on forward. Gideon, over to you.
Cool, thanks, Chris. Yeah, it's really interesting to hear what you guys are up to, and we're very excited to be, partnered with the most credible and largest by market share, smart contract auditor in the world. And it's been amazing to see the growth that CertiK has gone through, during this exciting period of the blockchain evolution. But Chris, of course, this is the precursor to this startup pitching competition on the 10th of August in Cape Town. We're really excited about that. So we're encouraging startups to, of course, apply to be part of the competition. Chris will speak shortly to what prizes are on offer and what you can win, outside of course bragging rights and taking advantage of the Cape Town and African startup ecosystem. So we're really excited about that. So come join us. Outside of just engaging with various startups and entrepreneurs in the space, we'll have some keynotes and some panel discussions there, and of course free pizza, a couple of beers if that tickles your fancy, or some orange juices, whatever you're into. And we're hoping to have an awesome night on the 10th of August in Cape Town. So if you scan the QR code there, you can apply to be one of the startups pitching at the competition. And we're really proud to have CertiK as the partners in this endeavor and in this event that we're hosting.
Thank you, Gideon, for that. For those that are keen, those projects that are here and are really interested in security, what we've decided to do as an organization in conjunction with CV Labs is to provide prizes for first and second and third prizes. So, and again, as you'll see, this will all be related to securing and providing defense mechanisms for your projects. We intend to provide a discount of equivalent to $5,000 for the winning pitch. So for the winning pitch, whatever that you will be undertaking with CertiK, whether it's an audit, or whether it's a pen test, or whether it includes a KYC, we will provide a discount of $5,000 for the first prize. The second prize will provide a discount of $3,000. And the third prize will be providing a discount of $2,000. So for those projects that are looking to sign up for the competition, we would want to ensure that you all sign up and are ready for the 10th of August. And hopefully you'll be big winners from this competition. We look forward to seeing you.
Awesome. Cool. Thank you, Chris. Yeah, I think, the big thing for entrepreneurs that are interested in applying is, especially, of course, if you're in the blockchain space, is having that stamp of approval by someone like CertiK. When you're pitching to a VC like CVVC or any of the other ones, it's really important to have or to try and create as much credibility around your project as possible outside, of course, of your traction metrics and your MVP, is also just to have credible sources like CertiK putting their stamp of approval on. It just increases your odds of success in terms of trying to raise funding and to raise capital. But awesome, Chris, thank you so much for being part of this event, and we're excited that CertiK is also pushing into Africa and can see the opportunity like we do on the African continent. So we're really excited to have you and the rest of the team as part of this event and part of creating the ecosystem in Africa. So next, we're going to speak straight to the horse's mouth. We're going to speak to Zach George, who is a general partner at Launch Africa Ventures, which is arguably the biggest venture capital firm, at least by deal flow or investments on the African continent, 100 plus investments in various startups within the blockchain space, but across all different technologies. So we're really excited to engage with you, Zach, on the competition, and I'm sure a lot of people are going to be interested to hear, straight from the horse's mouth about what you sort of look for, when engaging with startups, and what stands out when startups are pitching to you. But maybe a quick introduction from yourself and Launch Africa, and then we can get into one or two questions.
No, of course. Thank you, Gideon. Yeah, I mean, for those that don't know us, as Gideon mentioned, we're one of the two managing partners at Launch Africa Ventures. We've been around for just under 3 years now, and we work very closely with CVVC from a co-investment perspective within blockchain, which probably makes up a relatively decent portion of or a subset of our portfolio. So we've been the most active sort of tier one early stage VC in Africa for the last 3 years. We've done 133 investments across 22 different African countries. Obviously, as no prizes for guessing, the top 4 economies that we focus on are Nigeria, South Africa, Kenya, and Egypt. But we're one of those funds that takes a significant stance on frontier markets outside of the tier 1 countries. So we're often the first investors from an institutional perspective in markets like the DRC, Cameroon, Tunisia, Senegal, Morocco, etc. Our focus tends to be very heavily B2B and B2B2C business models, simply because there's a big challenge, not just in Africa, but most emerging markets when it comes to the cost of acquiring customers. And unlike the US and maybe some parts of Western Europe and possibly Israel, there isn't a lot of capital available at the pre-Series A stage, or for that matter, even sort of the pre-seed stage, for you to spend on acquiring customers. And marketing needs to be a very big subset of your total budget. Africa tends to be quite a risk neutral, or to a certain extent risk averse market when it comes to early stage venture, and that's a gap that we primarily focus on filling. So prior to us coming on board, the vast majority of funding going into pre-seed and seed stage startups in Africa was angel, friends and family, and maybe a couple of hyper regional VC funds. And then we've decided to carve that niche out for ourselves, where we focus on founders that have gone through either good accelerators, global accelerators like Startup Bootcamp or Y Combinator or Techstars, or specific blockchain accelerators like CVVC and others, if you have a niche subsector, and then help them through that valley of death where the drop-off rate between pre-seed, seed, and Series A is exceptionally high. But the one thing that people may not know about venture in Africa is once you're an African venture that successfully raised a Series A round and you're doing, relevant metrics, $1 million in ARR or more, the drop-off rate post-Series A is the lowest in the world in Africa. And that's a really important barometer if you're a VC or any investor, because that once you've helped a startup get to its Series A, there is so much pent-up demand from a product market fit perspective that the likelihood of you failing due to non-systemic reasons is much lower in Africa than anywhere else on this planet. So it's almost beholden to funds like ourselves and CBVC and the others to help these founders get through this sort of chasm, for lack of a better word. And what we want to do is to help founders get to Series A traction, be it from a revenue perspective, a transaction volume standpoint, or from a customer standpoint, in 12 to 18 months, maybe up to 24 months, versus what the average in Africa is, which tends to be closer to 4 or 5 years. I mean, most of the most prominent technology startups in South Africa, for example, have taken anywhere from 6 to 10 years to get to Series A. And it's not because these are, companies that don't have product market fit or haven't found a problem solution customer pain point. It's just that to grow and scale technology businesses, be it B2B or B2C, you need capital. And there isn't a lot of capital available or smart capital available at the early stages. And I think founders need to be very aware of how to, if as a founder you're counting pennies and focused on just preserving cash and not growing because you don't have capital, and you're watching your bank statement and your bank balance every week, then you can't focus on acquiring customers. So I think it's so important as founders to be able to tell a story about how you're able to generate those unit economics very early on in your business, so that VCs like us can help provide that fuel to help you get to those Series A metrics. And once you have a Series A lead investor lined up as an African tech founder, your path towards profitability, towards market share, towards cross-border expansion is a lot easier. And that's a very important part of this discussion. So yeah.
Yeah, well said, Zach. I think what's interesting for us that we see about Africa is, it's an exciting ecosystem in all parts of venture funding, not just blockchain. A lot of funds flowing into those validated growth rounds, Series A and above. So there's still limited access to capital now in that really early stage environment. Accelerated pre-seed, seed stage. Although of course that's changing very drastically. I think it's more important for African startups versus developed markets to get more traction metrics in that early stage part of their life cycle of the startup versus in other markets, because it is tough to raise that first institutional check. And I guess for us, that presents, as VCs, it presents a sort of arbitrage opportunity or what adds to our investment thesis. But on the back of that, you guys have made tons of investments, north of 100, which means that you've seen probably north of 1,000 pitches. What sort of stands out for Launch Africa and for you when someone's pitching to you? And maybe we can speak more to the holistic stuff before we get into actually what's exciting from like a traction metric perspective. But at the end of the day, the first time you're engaging with someone, a lot of it is perception, right? If it's a virtual pitch, is the internet working? Some basic stuff like that really does help. What stands out to you when you're speaking to a startup and they're pitching for the first time to Launch Africa? A better view of the market, not just people that are direct competitors, suppliers, tenants, vendors, you name it.
And we have a bird's eye view of things like your margins, your take rates, your growth rates. The number of founders that have absolutely no idea what comparables are in the market is so shocking. And I don't blame them, because most founders tend to be very technical and laser focused on product. And often being the chief product officer of, or the chief architect of that particular piece of technology does not qualify you to be a founder. A founder or a CEO is someone who understands the entire industry, understands things like market positioning, market share, the cost of growing versus the cost of pursuing a path towards profitability. It's basically understanding Econ 101, but within your market. And way too many founders don't have those skills, right? If I were to ask a simple question to a founder saying, cool, you project a revenue of $2.5 million in year 3, how do you get there realistically? The number of founders that come back to us and say, well, let me talk to my CFO and give you the numbers. I mean, you've lost me. I mean, because the fact that you can't articulate that, and this is your company, is shocking. So I think domain expertise as a founder and a CEO super important, whilst being humble enough to be mentorable and coachable. You don't want to have a founder that's way too meek and coy and shy and has no opinion of anything, but you also don't want a founder that's just downright arrogant and cocky and thinks that he or she knows everything, right? So it's a subtle balance. And to that point before is, VCs aren't going to back businesses that are focused on niche markets unless your margins are really high, right? So you could be a business that has very unique IP and focus on a tiny subset of a market. But if your margins are very high because you've got a big moat in your technology, that's okay. But for most enterprise SaaS businesses, marketplaces, e-commerce companies in the healthcare, education space, you've got to have very big target markets. And I mean, often in the industry called total addressable market. That's important. You've also got to have, because we're talking tech, you've got to have some sort of unique IP, something that isn't easily replicable, and the ability to form strategic partnerships with larger organizations. So in Africa specifically, if you're able to do POCs, proof of concepts, that is, with insurers or banks or telcos, there's a significantly better chance of us being interested. And then lastly, things like timing. You can't quantify timing, but timing is probably one of the biggest reasons why startups fail or succeed. And by being first to market, you're not guaranteeing that you are going to win. In fact, the vast majority of successful technology startups in Africa or anywhere else in the world are ironically not the ones that were first to market. So understanding, and even within a startup, when do you release the next version of your product? When do you expand into a different market? So market timing is super important. So yeah, I mean, these are some of the things that we look for.
Yeah, those are really good points. I think, on the back of that, I think because the venture capital landscape in Africa is quite immature, there's not a very strong understanding of the industry from founders as well. So they're not catching into the narrative that VCs want to hear. And sometimes you're getting a founder that's pitching an SME instead of a startup, and because they don't understand the model of VC, which is to invest in startups where there's an exit horizon within a couple of years, which means that they need to be able to raise a lot of money and deploy that cash to go through a hyper growth phase. So I think that's one of the sort of, now being on the other side, having a startup once upon a time, now being on the other side, I started to realize how important it is to understand both of your customers, which number one is obviously the customer that's buying into the product or service that your whole startup is based on. But the other customer in your early stages of your business is arguably venture capital firms and angels and private equity firms that are going to be funding the growth of of this business or of your startup, and you need to understand how we think to be able to raise that capital. And I think that's something that kind of has stuck with me and something I've been thinking about since being in the space, and thought if I ever go back into the startup world, I'll know what to say, But Zach, in terms of like emerging trends that you're seeing now, of course, at the end of the day, when you get an email or a startup applies to be part of your portfolio, if it's an emerging trend, it's probably something that already excites you. What are you trying to see? Of course, for us, it's blockchain, and there's certain use cases, but generally, what are you seeing in the venture space in Africa? What's exciting? What's emerging?
Yeah, I mean, good question, by the way. I get asked this a lot, and the answer changes almost every other week. But two common themes that have stuck with me personally and through our fund for a very long time are: in Africa, you've got to be able to solve problems that will not go away this year, next year, or in the next decade, and ideally problems that will not go away in the next 20 or 30 years. And the two biggest industries that have always stood out to me, although they aren't as funded as financial services, are education and healthcare. Education, number one, and again, both these industries are ripe for disruption from a blockchain standpoint, because industries like financial services have huge blockchain applications, be it in remittances, be it in credit, be it in lending, be it in savings, things like property rights management, etc. But healthcare and education, as far as I'm aware at least, do not have the level of blockchain penetration as they should. So just sort of park that thought for later. Why healthcare and education? From an Africa perspective, so we've got 1.4 billion people on the continent of Africa, which is going to surpass India in the next couple of years, right? And Africa is the fastest growing region in the entire world from a population standpoint. But what's even more critical is that the average or the median age in Africa is only 19. Whereas the median age in Europe is, I think, 39. In Asia, ex-India and China, it's closer to 50, and it's equally high in the US. So, you've got just over 800 million people on the African continent that are under the age of 25. Now, where are these individuals going to be studying over the next 20, 30 years? Do we physically have enough universities, colleges, and schools to educate them? The simple answer is no, absolutely not. And the cost of building these, asset-heavy models to educate people is just completely unsustainable. And neither can the manufacturing firms, the mines, the insurance companies, the banks, the tech firms employ these huge swarms of youth that are coming to the job market. So there needs to be a fundamental shift in the way education is looked at. I mean, education today, every major industry that we've seen has been disrupted because of the internet, because of mobile phones, and now because of Web3, right? Everything from the way we buy our food, the way we travel, logistics, to the way we market ourselves, the way we consume goods and services. But education is still running the exact same way it was 20, 30, before World War I. And this is the crazy part. K-12, university, post-grad, job for 15, 20 years, retirement, pension, that system, that basic structure is still the same. There's been a little bit of innovation here and there, but nothing has fundamentally changed. And it's the same thing with healthcare. People are still in developed markets like Switzerland and Germany and the US still driving to hospitals for GP visits and seeing specialists and paying hundreds of thousands of dollars on operations. Where's telemedicine? Where's remote surgery? Where's electronic healthcare bookings? Where is electronic health records. I mean, there's so much to be done in a continent like Africa, where consumer purchasing power is going up. Mobile phones, there are more mobile phones than people on the continent. And these are two massive industries. And the thing is, healthcare is a huge drain on a country's GDP. As you can see, the NHS in the UK is pretty much bankrupt, and so is Medicare and Medicaid in the US. So it's a huge drain on Africa's GDP if healthcare isn't addressed, and so is education. And both these sectors, if venture funding understands what can be done to improve and digitize, possibly through blockchain and Web3 startups, there's huge opportunities. But you also have to understand that these aren't 1, 2, 3, or 4 year massive growth, huge return sort of, you have to have a long-term view. People have to understand that, healthcare and education are 7 to 10 year investment horizons, not 2 to 3 year investment horizons. So those are the two sectors that I feel very strongly about.
Yeah, that's interesting to hear. You always make Africa sound so exciting. It is exciting, but I think the way that you about Africa, really makes it sound like an exciting opportunity, which of course it is. A couple more questions, 2 more quick ones. By the way, for anyone that's watching this, whether it's on YouTube, Twitter, Facebook, or LinkedIn, it's a new streaming software that we're using. If you do have questions, I can't guarantee this, but it should happen. If you do have any questions, you can put them into the comment boxes on whatever social media platform you're watching, and then we can try and tackle some of those if they do come through after 1 or 2 more questions with Zach. But Zach, just 1 or 2 quick ones. When you engaging with a startup or a founder for the first time and they're doing an actual pitch, what is memorable for you?
I mean, startups doing an actual pitch, there's nothing more memorable than founders being able to really articulate and quantify the size of a problem that they're solving. And you could call it being too analytical or too logical, but kill me with numbers or kill us with numbers. It doesn't matter. Most VCs, or at least most good VCs, tend to be ex-bankers, ex-engineers, and pretty analytical people. So go crazy. Tell me about your market size. Tell me about your margins. Tell me about unit economics. Tell me what it's costing to acquire a customer. Tell me how long, what percentage of your customers are churning. Why are they churning? How are you acquiring customers through referrals? There's nothing more attractive than a founder that really knows his or her shit about a market. And it's almost like don't wait until someone asks you questions. Answer them anyway, right? Tell us about your expansion plans into different markets. Don't wait for me to say, okay, you're live in Ghana. When are you going to expand to Nigeria? No, fucking tell me that in your pitch. Have a roadmap for 3 to 5 years. And talk about future hiring plans, right? Really good founders always have, a 5 to 10 year plan for their business. Talk to me about partnerships. Talk to me about how you can leverage distribution of large corporates in Africa. These are things that are very attractive to VCs, and there's nothing more attractive than someone that knows. And number 2, be brutally honest about your competition. I see way too many founders that badmouth their competitors. It's a huge turnoff, because you have no idea if the VC you are talking to has that company in its portfolio. You have no idea, right? I'm sure as founders, people talk to dozens of VCs every month, every couple of weeks, right? So never badmouth competitors. Give praise where praise is due, and accept. I've seen this slide on so many charts. It's not even funny how, you have your logo and then you have like ticks, and always your column and all ticks, and the other guys have lots of X's, some X. And I've seen pitch decks and presentations where like an e-commerce company trying to build a Shopify will say, oh, Amazon does not have these 4 things, but we've got it. And it's just literally like VCs are just giggling and they take off their video, because it's just be honest. Like be humble about what you're not good at, and be bloody proud about what you're good at, and explain that. And at the end of the day, the people on the other side of the screen are human beings. You're not pitching to bots. I mean, as far as we know for now, but we're human beings. So just be real, and never exaggerate or over exaggerate interest from others, right? So if you have a term sheet from another VC, tell them it's a term sheet. Don't say that the money's in the bank, hoping that you can, coerce other investors to come on board. So just be honest and realistic, and never ever burn bridges between other founders and yourselves, because you never know what could happen down the road. If you constantly bitch about other founders because you think that'll help you get more VC money, well, chances are at some point on the road they may want to buy you, and then you'd be having, your tongue's tied. So just humility is also a very important thing in this industry.
I'm going to ask the stereotypical question about advice now as the last question. However, I think it's quite an important question, considering the dynamic and fast-growing market that we have now in Africa. If you're a young startup, 23 years old, you're creating a pitch deck for the first time, and you're about to pitch to a VC, what is the one or two key points of advice that you would give that person?
I mean, I think the most important thing is you cannot have the same pitch, not the same pitch deck, the same pitch to every investor you're talking to. You just can't. I know it's hard work, but you have to do research on who you're talking to. So as Launch Africa, as an example, we've got 133 companies in our portfolio. We will be exponentially more inclined to listen to someone's pitch if they have done research on our portfolio and can, within the first 5 minutes of our talk, saying, hey, we are, solving, for example, if you're a health tech company, we're doing digitization of electronic health records in, let's say, Egypt. I noticed that one of your portfolio companies is a health insurance startup that does this. We could definitely work with them because of ABC. And by the way, this other company in Kenya that you recently backed can help provide credit to our patients for XYZ. And all of a sudden, you have a VC saying, oh my God, you've actually done research on our portfolio, and you're not just telling us how much we can benefit by investing in you, but you're actually telling us how our portfolio companies can benefit commercially if we were to invest in you. Immediately you have the VC's interest, but you've actually spent time doing research on your investor. And VCs love that. But I can tell you less than 1% of founders actually care about who they're talking to. They just cut, copy, and paste a pitch deck, a presentation, and hoping to God that one VC shows interest in them. And it doesn't work. So yeah, I mean, that's probably the biggest advice I'd give is do your DD on your investor as much as you expect them to do it on you. So
I've got an interesting question that I just wanted to know about myself, actually, is out of the 100 plus companies you've invested in, what percentage of those would you say came through your network and or were introduced to you versus the startups that you actually approached and did outreach on to engage with them?
Yeah, I mean, initially when you're starting a fund, if it's your first fund, you have to do a lot of outreach yourself. But I mean, this is now my third fund, and we're at a point where almost 90% of our deal flow is inbound. But I would say the best deals that we've seen and the ones that have performed the best are deals that founders have referred to us for other founders. So if you're a Series B or a Series C startup in Africa, so take, for example, a startup like Flutterwave or Paystack, right? Incredible founders, have been around for a while, great valuations, great numbers. and they are now starting to work with smaller startups in complementary services. So, for example, someone like a Flutterwave would work with an unsecured lender, or they would work with a credit provider, or they might work with an insurance startup, right? And InsurTech. Now, when those founders refer founders to us that are clients of themselves, we know to a large extent that they've done a lot of DD, otherwise they wouldn't be suppliers to them. So a lot of our best deals come from other founder referrals, which obviously validates the fact that, if we invest in good companies, they'll help us do equally good deals in the future. So yeah, that's and that sort of completes the final point of that is a lot of founders, because you've invested in them, will not only refer other founders to you, but will start investing in your funds. So we have a lot of founders that are now LPs in our fund. So it completes the full circle.
Interesting. I've seen some of the African unicorn founders starting to invest in a couple of funds, so that makes a lot of sense. I think your point also shows how important it is to not just have a good idea or a great pitch if you're starting out your new business, but also just network yourself within the ecosystem, because that's where those referrals come from, right? You might have someone in your portfolio that's ready on their Series B, but they know another founder that's working on something really interesting, and also a great potential CEO to drive that business. That's where those referrals and those introductions come from. So I think, as a word of advice to any founders out there looking to entrench themselves in the space, as it is quite small in Africa, is just to get out there, attend those events, and network and get entrenched into the ecosystem. But awesome, Zach. It's always great to chat with you. Your experience and what you're doing is awesome for the African space and the ecosystem. And it was awesome to have you on the show, on the webinar, and we'll see you soon. Thanks, Zach.
Thank you, Gideon. Cheers. Have a good one, everyone.
Awesome. Thanks. All right. So we are still very excited about our event, of course, 10th of August. So if you do want to apply for the startup pitching competition, I'm sure the QR code will come on screen in a second. You guys can scan the QR code and apply. Otherwise, if you didn't get a chance to scan the QR code, just look out on our social media platforms, namely Twitter and LinkedIn, search CV Labs, and you'll see one of our posts would have been talking about the event. Of course, you can also just come and attend, have some pizza with us, and enjoy a cool event. To finish off, I'm going to hand over now to Chris, who's the main sponsor from CertiK for the startup competition.
Thanks, Gideon. First off, I would like to thank everyone who's managed to drop in here for the last 30-40 minutes we've been on this call. We are looking forward to seeing you on the 10th of August. Just as a reminder, we have a pitching competition that's going to take place in Cape Town on the 10th of August. We're sponsoring that event as CertiK. The idea is to try and educate a lot of yourselves, if you're not already, about the importance of security as you're building your projects and as you're looking to launch. And of course, what's important to us is to make sure that you have CertiK in the bag to help you sort out your security issues. But we look forward to seeing you on the 10th of August. And I believe the QR code is there for you to be able to sign up. And thank you very much. We look forward to seeing you in a few weeks' time. Thank you very much.